Today in this lesson, we will learn how to calculate rate of inventory turnover. Here first of all, we will learn the formula. Then we have a question. We will take this information from the question and we will show you here how to answer in our exam. So first of all, what is the formula? We know rate of inventory turnover equal to cost of sales divided by average inventory, yeah? And average inventory equal to opening inventory plus closing inventory divided by 2, okay? So let us write the formula first. So inventory turnover ratio equal to cost of sales divided by average inventory. Okay, so here before we write up the amounts in this formula, we have a question. Let us have a look at there. So here we see Adia is a trader. She buys and sells one type of goods only. She has provided the following information. Here we see for the year to 31st October 2022. Here we see revenue, purchases, expenses and incomes. And same we have at 31st October 2022. We have here inventory, we have here trade receivables, trade payables and bank overdraft. Okay, so these are all information given here. We will take the relevant information to calculate this ratio. Okay, then we have an adjustment. The inventory quantity and valuation at 31st October 2022 were double those at 31st October 2021. Okay, so this will help us to calculate our opening inventory, because here on the question we have closing inventory only. It is $7,500. Okay, now first of all we will calculate our cost of sales. Here on the question we see there is no cost of sales, so we need to calculate. It is easy. We know cost of sales equal to opening inventory plus purchase minus closing inventory, yeah? If we have purchase returns, we will subtract from purchase. If we have carriage inward, we will add to the purchase. And if we have on the question goods for own use or cash drawings, we will also subtract from the purchase. Okay, so these items are not there. We don't have to think about it. Okay, so for future you have to remember. Okay, great. Here cost of sales equal to, so cost of sales equal to opening inventory plus purchases minus closing inventory. Okay, so here on the question closing inventory is given here $7,500 and we have here purchase $62,305. Okay, so here on the question opening inventory not given but closing inventory is given. It is $7,500. Okay, and in the adjustment it is clearly mentioned closing inventory is double those at opening inventory at 31st October 2021. Okay, that means the closing opening inventory will be half of closing inventory. Okay, so here closing inventory is given. It is $7,500. This is double of opening inventory. Okay, so if we divide by 2 we get here $3,750. Okay, so this will be our opening inventory. So let us write here opening inventory 3,750 plus purchase, it is 62,305, and we will subtract closing inventory. It is $7,500. Okay, so let us write here $7,500. Okay, now if we add these two amounts and if we subtract 7,500 from the addition, we get our cost of sales. Okay, and it is here 58,555. Okay, our cost of sales. Okay, so let us write here in the formula cost of sales. We got 58,555. Okay, now we have to calculate our average inventory. Okay, so simple, opening inventory plus closing inventory divided by 2. Okay, so here our opening inventory is 3,750. Our closing inventory is $7,500. we will divide this by 2 and we get here $5,625. Okay, this is our average inventory. So let us write here 5,625. Okay, now if we divide 58,555 by 5,625, we get here 10.409. Okay, if we round it up to two decimal places, then we get here 10.41. Okay, now what will be the unit here? Percentage? Dollar? No, not at all. Okay, it is times. So sometimes we see many students make mistake here to write the unit. Okay, 10.41 times. What does it mean? It means that business replaces its inventory 10.41 times in a particular period of time. Okay, so next tutorial will be important. There I'll show you how to calculate liquid ratio, okay, which is also called acid test ratio.